Thanks, Loretta. Thanks for that amazing introduction. Good day to everyone. So what I would like to talk about today is something that's quite important in the investment world, which is knowing the difference between asset classes. It is quite important because you will know the universe that you have where you can invest, and your understanding of how these different asset classes behave is also important. So this lesson takes you through these different asset classes and how they are grouped and what makes them different from each other. So just as a start, I want to take you through what an asset class is. So just the basic definition of what an asset class is. And then we'll go through the different asset classes that are there, the four main ones, and talk about the other ones just for a small bit, just for your understanding on what the differences are between them. And then lastly, I think something that's quite important, which is a word that is quite big and very important in the investment world, diversification, and where diversification and also the different asset classes actually marry, and why understanding the different asset classes is also important for diversification as well. So just as a start, what is an asset class? So just on the basic definition of what an asset class is, it is a group of investments or securities or investable securities that actually exhibit similar characteristics. So they are also subjected to the same laws and regulations, and the asset classes, the different asset classes, are made up of instruments that often behave similarly in terms of return, risk that I will touch on later on, and also where they will be listed or where they will be trading. So they should be trading in similar or same financial market. So typically they'll be trading in the same financial market. So just as a basic definition of what an asset class is, that will be just the few points that I think are quite important to actually understand on asset classes. And then just understanding the different asset classes as well. So there are many of them, but there are four basic ones, and even the four basic or main asset classes. You can also dig deeper inside each asset class and have a sub asset class where you look at it from a point of, is it a local asset class, or local as in it's traded in South Africa in this instance. And then there's also a foreign part of an asset class where that asset class has instruments which are trading in a foreign market, like listed on the New York Stock Exchange, for instance. So just as a start, equities, and probably this is one that you hear about quite a lot. So sometimes these are called stocks. And these are shares of ownership that are issued by listed companies. So a company will be listed, for instance, Naspers or Absa or Kumba, Exaro, whatever the listed company is, and people buy into the company by holding shares and having ownership of the company. So these are listed on a stock exchange. You may have heard of the JSE Stock Exchange, New York Stock Exchange, and they trade on a daily basis. The markets open in the morning and they close in the afternoon. And that's just the basics of what equities are. You can trade in and out of them. You can buy in and out of stocks at any time of the day when the stock market is open, and you trade these through a broker, which is able to actually buy and sell on your behalf. The next one is bonds. So these are fixed income asset. This is a fixed income asset class, and basically what is happening there? Your investment is in a debt instrument which pays interest on your investment. So it's sort of like you loaning a company your money, and because they're using your money to grow or buy more assets for their own targets, they also give you interest on the amount that you gave them. So they pay out interest to you. And these tend to have a lower risk when you compare them to equities or the stock market. So they generate interest above your income, and also at times they can preserve your money as well. Another important asset class would be property. So this can come as a listed property company, so a company that actually deals with buying of properties or malls, shopping centers, and they list on the stock market. Or it can be the physical part of property where you hold the asset class through buying an actual house or a group of flats, or buying them all. So that also forms part of the property asset class. And the last one that I wanted to touch on is money market. So this is the most simplest, and also when it comes to risk, when I talk about risk, I'm talking about what are the chances of losing any of the amount of money that you've invested in. So this can be as simple as a bank deposit. So you take your money, put it in a bank, and you get an interest on your savings. Or you can buy short-term money market like a bank paper, and they use the money that you have given them to actually loan out to some of their customers. So they're using your money to generate income. And since you will be holding it based on a certain term, so they are able to use that amount of money up until that time where they actually give you back your money. So they give you more in terms of your interest. So this one is slightly less risky. It's actually the less riskiest of all the other asset classes, where your income is sort of safe and also earning interest on top of it. And then the others which are out there, I mean, commodities, if you're looking at oil, you can buy gold, physical gold, platinum, copper, and also forex, where you buy foreign cash, dollars, or you can invest in like buying pounds, and then you disinvest when you see that the rand is weakened, and all those things. And also the other one would be derivatives as well. Derivatives would be slightly complicated because they are instruments which are derived from other instruments. So those are your main asset classes that I think are important in your knowledge of the investment world and what you'll be dealing with when it comes to deciding where you want to invest. And then going back to what I was mentioning about diversification, I think this table quite summarizes it nicely, because you can see that different periods in time, asset classes behave differently. So just talking about what the type of asset class would be, I mean, these three are the all share capped or share top 40 will be your local equities. So these are indices which are a basket of shares listed on the JSE. And then this will be your listed property, which falls under one of the asset classes that I mentioned, and also the bond market. And then this is going to be your foreign cash, or your currency, or forex. And then these would be also equities, but in the international market. As I said, you can have subclasses under equities where you are looking at local equities or international equities or foreign equities. And you can see that for the month of August, some of these were negative. Bonds were slightly up. The currency weakened, so it was up 7% for the month. And the international equities were down for the month. And if you invested your entire investment in the MSCI China index, you would have been down 14%. Whereas if you invested some of it in the India index, you would have been up 3%. So when you try and dial down the risk in your portfolio that is losing less, you want to diversify your holdings in your portfolio by looking at holding some of these asset classes in your portfolio instead of investing in just one. And even in one asset class, the local equities were down 6% in August, but you can see over 10 years, they've been putting about 10.1 per year positive equity returns. So there's quite a lot of volatility in some of these asset classes, whereas there are some which are less volatile or less risky, where there's the returns are more smoother, like the bonds here, which have been positive in the last 10 years or so. And there are markets where, as I said, the risk is more, and also, but the reward is also more. For instance, here, the NASDAQ 100, it was down 20% in 1 month, but over the last 10 years, it's been putting in 25% per year on an annual basis. So it's important to diversify your portfolio when looking at investing and understanding the different asset classes, so that you know where you want to put your money in, and why a certain asset class will be behaving in a certain way, and the different behaviors that they have as well, in terms of risk, and also the different return profiles that they have as well. And I think that is what I wanted to share about this. And thank you for listening, and back to you, Lerato.